Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today we are going to do what? We are going to deconstruct this amortization formula. Now before we deconstruct this amortization formula, let's do a simple maths. Okay, let's take one example. Let's say I needed money, okay, and I asked for my friend to give me a certain amount, let's say 100 rupees. Okay, 100 rupees. I asked for 100 rupees from my friend, okay, as a loan amount. This is very minimum and negligible amount. It's just an example. So I took a loan from my friend for 100 rupees and I said I won't be able to pay you immediately 100 rupees or within a year 100 rupees, but what I will do, I'll pay you in the next 3 years. Every year I'm going to pay you a certain amount of money. I said for the next 3 years I will pay you equal installment, equal yearly installment, which will include what? Interest also. Okay, whatever amount I am paying, that will include the interest amount at the rate of 10%. Okay, so for 3 years I'm going to pay off that particular amount of money. Okay, so now this equal yearly installment will include what? It will include the principal amount as well as the interest amount. Okay, but I don't know how to calculate it. So what I did, I was not knowing this formula also, right? So instead of doing this, I prepared an account for my friend, like how we prepare. Okay, so when I prepare an account, this is my friend's XYZ loan account. Okay, XYZ loan account. The entry will be cash account debit. Cash comes to me to XYZ loan account. So by cash account 100 rupees. Okay, cash comes. Now at the end of the year I have to pay interest on this full amount. Okay, so what I'll do, interest on loan account debit to XYZ loan account. So this 100, on this 100 rupees I'll pay interest on loan account. How much? At the rate of 10%. Okay, on this full year I used this 100 rupees, so I have to pay on the full amount 10%, that is 10 rupees. So now I am paying a certain amount. I don't know how much amount I am paying. Okay, so I assume, let's say I am paying to cash account, I am paying X amount. I don't know the amount. Okay, so I am assuming that I am paying X amount. So for the next year, how much balance I will carry it down? 110 minus X. 110 minus X. Okay. So next year by balance brought down will be 110 minus the X amount, right? Next year, the whole year I use this money, I have to pay interest on what? 110 minus X. Okay, 110 minus X, on that I am paying 10% interest. So to interest will be how much? 110 at the rate of 10%. On whole this I will multiply. 10% of 110 is 11 minus 10% of X is 0.10x. Okay, so this will be how much? 121 minus 1.10x. X plus 0.10x will be 1.10x. Okay, this is what I paid. Right, now again I am paying an X amount. Okay, so how much now I am paying? I am paying again an X amount. So to cash account X, I am paying an X amount. So now how much is due? 121 minus 1.10x minus X, right? So how much balance I will carry it down? To balance carried down will be 121 minus 2.10x. This is the amount which is due. 121 minus 2.10x. This whole is 121 minus 1.10x. Okay, fine. Next year again my balance brought down will be how much? 121 minus 2.10x, right? On this I will again pay interest. 121 minus 2.10x at the rate of 10% I am going to pay interest, right? So how much it will be? By interest account it will be 10% of 121 is 12.1 minus 10% of 2.10x is 0.21x, correct? 0.21x, and this is 133.1 minus 2.10x and plus 0.21x, that is 2.31x minus 2.31x. okay, this is 2.31x. so again I paid cash to cash account x. okay, so now there is no more balance. So this is how much total? This has become now 0. okay, now no more amount is due. okay, so how much I have paid? 133.1 minus 2.31x minus x will equal to how much? 0. now nothing is due. so 133.1 minus 2.31x minus x, that is 3.31x will equals to 0. now I don't know how much is the x amount. okay, so what we'll do? We will do a simple max. 133.1 equals to this, I will take it over here, it will become positive, that is 3.31x. okay, now I have to find out this x amount. so 133.1 divided by 3.31. now I need a calci for that. 133.1 divided by 3.31 equals to 40.2115. okay, so every year annual installment, I got this x amount, this x amount. okay, every year I am paying 40 rupees to 115 paisa to my friend, and at the end of the 3 years the amount will be 100 rupees. you can calculate it. okay, so this is how I will get to know how much will be my yearly equal installment, and that equal installment will include the principal amount as well as the interest amount. obviously in the initial year the interest amount will be more, because I am paying off this whole interest amount in the first year itself. okay, so whatever was due on the first initial amount, I am paying the interest amount, and the remaining is the principal amount. so I am paying in 3 yearly equal installment 40 rupees to 115 paisa. now instead of doing this, they come up with this formula. okay, this is actually they come up with a geometric series, they come up with that. and how they come up? like you are going to learn the time value of money, wherein you will learn the future value, the present value, future value of an annuity, present value of an annuity, and based on that they come up with this formula. but let me explain you what this formula will try to say. okay, now let's say if something some amount is due to me, let's say 100 rupees was due. okay, and if I say to my friend that I won't be able to pay right now, I will pay you 100 rupees at the end of 3 years. okay, now how to calculate that? let's say 100 rupees was due. okay, in the initial first year I have to pay interest, so it will become 110. I didn't pay. okay, again I use this amount, again on that 10% interest will be charged, that is 11. so 121 rupees. again in the third year interest at the rate of 10% will be charged, that is 12.1. so in total the amount due at the end of 3 years is 133.1. for that, this is the future value. This is the present value due to my friend is 100 rupees. and if I don't pay at all at the end of 3 years, how much I am going to pay? 133.1. okay, because interest, it includes the interest amount also. Now for that, okay, to determine this future value, what is the formula? The present value into 1 plus r raised to n. okay, the future value will be determined when 1 plus r raised to n, that is present value is 100, 1 plus r is 0.1 raised to n, that is 3 years. R is the rate of interest, n is the period, amount due for how many years. okay, so n is the period. How much we will get? 100, 1.1 in 3 times, so you need to factorize it for 3 times, so it will be 100 into 1.331, so we'll get to know 133.1. okay, this is the formula. This we calculated it manually, and this is the formula for how to calculate the future value. Now when we apply it over here, we will get to know what the compound growth factor, how much amount will be due to that person if we don't pay at all in the initial years. We are not paying, we are paying at the end of the year. So how much amount will be due to that person? okay, similarly over here it is the same, 1 plus r raised to n, 1 plus r raised to n, that means it's the compounded amount, okay, on which interest is included if we are not paying. If the amount is getting, it's due every year, how much amount will be due at the end of that particular period. okay, now in this case, in the numerator part, we are multiplying with the rate. okay, so at the end of the year, how much interest, okay, how much is the weight of the interest on this particular amount? Let's say here P is 100. okay, rate of interest is 0.1, 1 plus r, that is 0.1 raised to n, divided by 1 plus 0.1 raised to 3 minus 1. Now how much is the weight of interest on this amount? 0.1 into 1.331. how much is the weight of interest at the end of the amount? okay, we get to know, okay, this is the weight on this particular amount. So 0.1 into 1.331 will comes into what? 0.1331. okay, and this denominator part says what? 1.331. this is the total amount which will be due at the end of 3 years. And if we deduct the principal amount, okay, here we are taking 1 as the principal amount. okay, we will multiply it with 100 later. This is what we are taking the principal amount as 1 rupee. okay, so if 1 is the amount which will be at the end of 3 years, it will go to 1.331. and if we take out this, if we eliminate this minus 1, how much is the growth factor? okay, how much is the growth, how much the money has grown over that period? okay, so this will do what? This will divide it into equal installments. okay, 1 rupee, like this interest factor, this is the weight, and this is the growth over a period of 4 years. So for a particular 1 year, it will be how much? 0.1331 divided by 0.331, it is 100 into 0.402115. 100 multiplied by 40, it's equal to 40.2115 rupees, and that's how we get to know this equal installment amount. okay, I hope you get it. More things will get clear when you will understand the time value of money, what is the present value, what is the future value, and that will be, this is the future value after a period. But what will be the future value if we are paying it annually? What will be the present value of that particular annual amount, right? So I hope you got this formula. This is a simple maths which we did. This is deconstructing the formula. wherein there is a war between the numerator and the denominator. Like if this is the interest weight of that particular, that is the compounded interest growth factor. So if this is the weight of interest on this particular growth amount and how much it has grown over a period of 3 years, so how much it will be for a particular year? It will be 40.2115 multiply with 100, we'll get 0.402115. So multiply with 100, we'll get the yearly equal installments. I hope you got it. See you next Wednesday. Thank you very much.